Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Monday. It's Monday. It's the day after Easter. Hope everybody had an absolutely amazing holiday weekend. I am your host, Chuck Fulkerson. Welcome to the Daily Market Commentary. For those of you guys that are new to the channel, do me a favor, click that subscribe button down below. Hit the notification bell so that you get it. For those of you that have been around a while, you know that we didn't have a Daily Market Commentary on Wednesday or Thursday of last week, and then frankly didn't have one on Friday because the market was closed. So it's kind of hard to call it a Daily Market Commentary. We only do 2 days a week. Had a little bit of... Charlie, my longtime co-host, fell and broke his arm, so he had to go into surgery Thursday morning. So I was a little bit out of the loop, but we are back in and ready to roll. So let's go ahead and dive right in. Now, very quickly, we had a live trading room last night, and in our live trading room, we looked at a couple of different levels, but we were taking a look at the fact that the S&P was showing some weakness, and we looked at this area down here as a potential breakdown. So we have gotten the breakdown out of this little area. It was a fairly wide stop loss, so a lot of people may have been uncomfortable with that. Now, if you did take the breakdown, I think now it's okay to take your stop and move it to break even, simply because we've got a little bit of basing here, a nice little move down. If you missed the breakdown, I still think that we've got a little bit of weakness overall in the markets, and I think it's okay to look for a potential short opportunity. I think that your short opportunity would also come at another breakdown from where we are right now if you wanted to try another breakdown even a bit lower. In the NASDAQ's been our stronger of the two markets, so I don't know that I would be looking for that one for the short. But if price does break down in the NASDAQ, we've got a really nice price target down here at 76.24 by 76.12, where we have this little bit of basing, fair price value area after a pivot low, and then a strong move away. Once again, this one you could look to short on the breakdown below one of these areas if you are so inclined. But all in all, I mean, the markets are still very bullish, still very strong in both, whether it's the S&P or the NASDAQ. However, we are seeing a little bit of slowing momentum, right? I do have a lower swing low here, so this is a lower swing low and a lower swing high, right? So that gives me the right to take shorts. The fact I got a lower swing low and a lower swing high. Now, it's still not a super strong downward trend, but a lower swing low and a lower swing high means that I've got the beginnings of a potential downward trend using the 4 hour as my big picture. Now, moving over to crude. In crude, we had a breakout long above this 64.85 region. So anybody who took the breakout long, leave me something in the comments down below. Let me know if you were able to take that trade. I'm going to remove this level here. Now, we didn't get the basing in front of it that I would have liked to make it a more ideal breakout. However, this is a parabolic move, and oftentimes those lead to retracements. So we have a potential reversal in the retracement here. If you do want to go to a 15-minute chart, you know, we might get another. You might get another opportunity to get long. Somewhere in here would be another opportunity to get long if price indeed breaks down a little bit further. Let's just convert that to a purple line, and that would be our level in crude. Looking over at gold. So in gold, we've got nothing to add from our live trading room yesterday. A little bit of supply up in here above in that region, and then a little bit of demand down below in this region here. So two areas in gold. Neither one of them are super great levels, but we're in between there, so there's no sense in forcing anything. Moving over to bonds and our currency markets. In the ZN, which is our 10-year note, we have a breakout long set up above this 75 area, 123.075. So a breakout above this region, I think we could get a little bit of a run. We are putting in a pretty nice base here, right? This is a good basing pattern, and a breakout above there would make for a pretty nice base. And then in the Aussie dollar, we've set up a level up in this region here for a potential reversal. Although we are setting up for what could be a decent little breakdown since we have this price action occurring. So be aware for that price action. Now, we may break out up first, but still sets up for a nice little breakdown. The fact that we're basing in front of this level makes this level that much weaker. Next, looking at the euro. So in the euro, we had a little bit of a gap up in price movement, and then prices are continuing to rise. And as it rises, we've got two areas of supply above us. And the reason we're looking at supply areas is because the 4-hour we had put in a lower low, and then this would make a really nice reversal for a lower high. So I think this is a really nice setup on the 15-minute chart. Remember, we know it's 15 minutes because it was found on with a purple line. So the purple lines tell us that it's a 15-minute time period. Canadian dollar. So in the Canadian dollar, we've been talking for a while about the Canadian dollar in this sideways, boring price action. And let me remove some of these. And it's been sitting and hovering above this line. We hit it and got a nice move away. Hit it again, got a nice move away. We can kind of continue to do that. So I'm actually going to remove it at this point because we've hit it a number of times. This is actually a nice little potential sell area, but I don't love the lower wicks we're getting leading into this sell area, right? The lower wicks leading into this potential selling area make it a little bit more scary. But you can use this level today if you think that would suffice and make sense. If I zoom in on that, when I zoom in, I don't like it as much. When I went from the 4-hour to the 1-hour, I don't really like the setup anywhere near as much. And so I'm going to let this one be. We're just going to continue kind of that sideways. I actually like this area much better on the 1-hour, which is a little bit of a wick over wick level right here. Move down, one quick retest, which means this would have to be a confirmation short. Okay, and that's a confirmation short because price moved down, opened here, traded up into it, and then moved away. That's why it's a retest. Let's go. Break British pound, Japanese yen. So in the pound, we had a really nice breakdown. Leave me a comment down below if you were able to catch the breakdown trade that we had talked about last week in the pound. So we had this trade set up before I was not able to deliver the DMC. So if you're able to catch that one on Thursday, you've gotten a really nice run. I think it's now time to take your stop and move it down into this range here. I think we're continuing to make the next leg down, and I think it'd be okay if you want to try to jump in and join on that trend anytime. And then the Japanese yen, we're really just chopping sideways. Not a whole lot in here. This typically signals big movement. I don't like the fact that we're basing above this area, so I'm going to switch this to a confirmation area. As it is, but I like supply levels above me better than demand levels below me, simply based on what the 4-hour chart is doing, right? The 4-hour chart is definitely telling me better chance of being short. However, with our sideways price action, it's probably safer bet not to force anything. So, as we head into this week, understand that we've got a lot of earnings coming out this week, and the earnings on individual stocks make for a tremendous amount of opportunities. If you're not trading equities or options, and you're only trading futures, I would say that you're missing the boat. And I run into a lot of traders that say, no, I'm a futures trader. No, you're not. You're a trader. You didn't get into this to trade futures. You got into this to be able to make money and to live the life you choose to live. So don't limit yourself to just futures, especially in a week like this where we've got earnings coming up and a lot of stocks could be moved into some high quality areas of demand and supply. I think it's prudent in order to kind of look at all of the available opportunities that are out there. So just keep in mind, don't box yourself in. Don't make yourself a one-trick pony, because then what happens is when the markets are slow or when there's not a lot going on, you end up forcing trades, and there's a lot more opportunities out there when you open up for both options and futures. So if you want to learn a little bit more about that, go to tradersarmy.com, see if there's some of the things, we've got a lot of stuff in the free content that you can take a look at. And if you want to subscribe, try it for a month, see if you like it. It's promo code TRADEUP. But thank you so much, everybody. I hope you have a great day, and I will talk to you soon.